What's up, everybody? Good morning. Good morning. Good morning. Happy Thursday. This is the morning show. It's the best morning show in finance. Spencer Israel here with JC Parets. We do have an update for you on the trials, travels, tribulations of one Steve Strazza and also Sean McLaughlin and also Giancarlo Mendez. We do have word that they're actually on their way home, which is exciting. But for today's show, man, we got a lot going on. Okay, we're going to talk about JC's next catalyst for, in his opinion, next catalyst for a bull run. We got a shit ton of earnings, frankly. We won't talk about the Fed too much, or hardly at all, frankly, because who really cares about that? But our guest today, very, very excited to talk to Rob Koyfman. He's the founder and CEO of Koyfin. It's a fantastic research platform. If you haven't checked it out, you should. Kimmy Sokoloff will be on at 9:15 as always. And you know the drill by now. Drop me a like, tell your friends, tell your neighbors. It's the morning show. Let's roll.
Mr. Israel, good morning, good morning, good morning.
What's up? What's up? How we doing? How we doing?
Big day today. Big day. Big day. Big day on the morning show. Got Rob Koyfman in the house.
Oh, yeah.
Rob getting a lot of love from this channel. Howard Lindsay was giving him some love, doing a little, kind of showcasing some of the stuff yesterday on the podcast. Today we got Rob Koyfman on. Big fan of that platform. I use it every single day. I'm also an investor, full disclosure. So I'm also rooting for him. But I think whether you're an investor or not, you should be rooting for him. You know what I like about Rob that gets lost? I feel like people don't realize this. So obviously, as you can imagine, I'm friends with a lot of the CEOs of charting platforms around the world, as you can imagine. And as great as they are, most of them are coders. They're computer guys by background that are getting into the finance game. Rob is the opposite. Rob is one of us. And he got into the software game, right? So it's really the only example I can think of that it's one of us, right? So that's Rob. So looking forward to picking his brain about some of the new features. And I'm always telling him to build things for me. Sometimes he listens, usually he doesn't, but it's all good.
All good. All right, that'll be at 9 o'clock. In the meantime, state of the markets, yeah?
Yeah.
Yeah.
Yeah. All right, Mr. Israel, listen, it doesn't matter how long you've been in this market. It doesn't matter, how much experience you have. Go back and study markets. You know what you're going to find? You're going to find that in bull markets, you're going to see new 52-week highs quite often. Quite often. It's like a thing. In uptrends, just a lot of new highs. It's hard. You want to show the chart?
Yeah. I was waiting for you to tease it, but here we go.
Throw it up there. You see a lot of new highs in uptrends in bull markets. Go back 100 years. Pick your favorite bull market. You know what you're going to find? You're going to find a lot of new 52-week highs. You know what you're not going to find a lot of in bear markets? You're not going to find a lot of new 52-week highs. It's hard for the market to go down if it keeps making new 52-week highs, Spencer. Had you thought of it like that?
That does check out. Yes, it is hard for the market to go down when the market's going up. I can confirm this.
I mean, and, in bear markets, for example, last summer when we were waiting for the market to bottom, the first thing stocks need to do before they can start to go up is to stop going down. And that happened last June. June the 16th, as a matter of fact, was the day that stocks stopped going down. And it was just a consistent progress from there. Now it's the opposite, right? So now if you think the market's going to go down, the first thing you need before stocks could start to go down, they need to stop going up, right? And that obviously hasn't happened as the S&P 500, Dow Jones Industrial Average, Dow Jones Transportation Average, all making new 52-week highs. The NASDAQ up a 1.5% here pre-market, pushing up against new 52-week highs as well, pushing up. The Dow's only a couple of percentage points from new all-time highs, Spencer. So that's what's on my radar. So the question becomes, okay, JC, Mr. Smarty Pants, what is going to be the driver? Is it going to be the Powell? Is it going to be the inflation or the earnings or whatever other bullshit people think about these days other than price? And I think it's going to be the United States dollar. That has been the catalyst. Anybody who's fought me on that has been wrong. The market itself is the ultimate arbiter. And when the dollar peaked at the end of September, early October, things really got moving. The S&P 500 was up 7.5% in the fourth quarter last year, another 7% in the first quarter this year. The second quarter was up like 8.5%. We're already up another 3%. You know what happens in bear markets, Spencer? Stocks don't rip every quarter. Like literally, stocks are going up like a lot every single quarter. Like by definition, that's a bull market, right? When stocks go up every quarter, we call those bull markets where I come from. I don't know how it is in New Jersey. Where I come from,
that's what we call them. I mean, yeah, in New Jersey they're bull markets. In Boston they're like bull markets, but it's the same thing.
Oh, okay, touche. I see what you did there. Well, so what's going to be the catalyst to send stocks higher? Like, listen, if it ain't broke, don't fix it. What got us here? You know, what dance with the date that brung you? What do they say? Is that right? Dance with the date.
I think that's close.
That's what they say. Dance with the date that brung you. And you know what's been really sending stocks higher? It's really been that falling dollar. Or is the fact that stocks are going higher? That means that there's less of a need for a flight to safety into the U.S. dollar. Like, is it the chicken or the egg? Who cares, right? Who cares? Eggs are good protein. Stocks go up in bull markets, and that's what we've seen here. Now let's take the other side of this, right? So if this is just a failed breakdown, and now the dollar is going to squeeze higher, you're going to see the dollar index above 101.5. My bet is that stocks are going to be under pressure if that happens. Now flip this on its head and let's show the other one.
I think
flip this one on its head.
No. Yeah,
the other one.
There
you go. So if the trend were to continue, and this was just over the last few days, just a retest of that breakdown, and the dollar really starts rolling over from here, stocks are going to rip. You're looking at the S&P 500 above 5,000 in that scenario. And people are like, "Oh my God!" But the PE ratio, bro. If you haven't been long stocks because you don't like the PE ratio, like you're just making donations, and it's our job as investors to take your money. 101.5 is a big one there, Spencer. If we're below that, we want to be buying stocks very aggressively. If we're above that, then we're probably a little bit over our skis, right? A little out in front of our skis, as they say.
Yeah.
So I don't want to have aggressively long positions in the equities market with the dollar above 101.5, 102. Not for me. For the record, we're below that. So it's all systems go. And I think that, I've been saying that, we've been expecting rotation into the back half of the year. I don't think the leadership in the first half is going to look like what it's going to look like in the second half. I think it's going to be different. And the hate that I'm seeing out there, the pessimism in real estate has my attention, Spencer. It really has my attention. Throw up there slide 5 there. This is the real estate ETF XLRE. Taking that entire rally from the COVID lows up to the 21 highs, and we've retraced 61.8% of that. So if this is going to head higher, retracement complete. So sentiment is at washout levels. Real estate has completed its retracement, if that's what this is, just a retracement. Let's take a look at some opportunities. I like Alexandria Real Estate Equities. Look at this one. This is a $22 billion REIT, pays a 4% yield. Offices, in particular, stand out to me in terms of pessimism. So definitely a place that we want to look there. This doesn't look so bad, Spencer, huh?
You're right in that the chart looks like it's at a logical level of support. But man, is it hard to get. If you just think about what's happening, I mean, I guess there's a reason sentiment is bad, right? Because there's a lot to not like if you just think logically about the commercial real estate market right now and just look at all the headlines. There's a reason they're negative. It's
Spencer.
It's not by no.
You think that the market is logical? Come on.
No, but you can understand the pessimism, certainly, right? And that's like by design. So it takes some discipline to look beyond that, right? Because
listen, if you're not buying stocks because you don't like what's going on in the economy, you already lost, right?
I mean, yeah, what you're saying is so easier said than done for a lot of people. I feel like, maybe
Good.
not for you, but for a lot of people, it is hard to look. I mean, look, it's not like the pessimism in most things. Pessimism usually is not totally unfounded. It's just not the whole story, right? Um, there were good reasons, I think, not to like commercial real estate. There was that whole. I mean, I actually read that. What was it? The New Yorker.
You actually read the article? No.
I actually read that last 2 weeks ago. Whenever it came out. Yeah, it was long as hell. I'll be honest, I didn't read all of it, but I read like 90% of it. I read most
All
of
right.
it.
What do I need to know? Real estate's going to crash?
Commercial real estate is doomed. Yeah.
All right. Got it. Thanks. So anyway, with that being said, we are buying commercial real estate very aggressively, in fact, down here.
Look, I agree with you. I am agreeing with you that the chart makes sense.
Yeah, think about it. Like, if you have a hard time buying, a stock because you don't like the economy, like, that's your problem. Like, you need to overcome your mentally weak living style, I guess. Like, I don't know. Like, if you have a hard time buying a stock because you don't like the economy, maybe see a therapist, maybe. Right? That could help. There's good ones out there.
Look, maybe it's easy for you, right? Which is awesome, right? But it's not so easy to just look past, even if you like don't necessarily care about the fundamentals. Just the narrative, right? The narrative out there.
You're listening to narratives you already lost, Spencer.
I'm saying it can be hard to look past it. There's a reason not everyone was buying stocks last summer.
They weren't listening to our show.
Well, our show didn't exist last summer.
Well, other shows that we were doing. All right, let's go. There's a few. This one's really interesting. It's an office REIT in particular. Look at Public Storage. Not bad. Like, former resistance turning into support. No,
you know what's interesting about this one? I think this showed up on the Buzz. I think this showed up on the Buzz this week.
Yeah, 270, 280. That's a good level. If we're above that, I like it long. Again, same as Alexandria. If we're above those former resistance levels, I like it long. Take a look at the next one, CoStar. Right? CSGP. You see this thing? So this is real estate services. So it's not exactly a REIT per se.
I don't even know what that means.
They provide services for real estate.
Thanks.
Yeah, like services, like real estate services, of course.
Yeah. Okay, I get it now. Yep. I got it.
But nevertheless, pushing up against new all-time highs. Keep this one on your radar. If we get a breakout, this one goes back a ways, 25 years, right? CoStar, investing heavy. Says CoStar is analytics. See, services, analytics services there, Spencer.
There you go.
Right? Go on to the next one. This is the Empire State Building, right?
Oh, my goodness.
It's the Empire State Building. How's the Empire State Building only worth $2 billion?
It's a good question. It's, I don't know, location.
The location sucks, for the record. It's like one of the worst parts of New York City.
I've never looked at this chart before.
Voila. Now we're looking at it. Is this a double bottom, though? Right? Investing heavy is like, this is a terrible chart. Yeah. Is it, though? Is it a double bottom? Is it an epic double bottom? It's the Empire State. Are you going to show it the Empire State Building?
I mean, I would be curious to see just like a trend line drawn, just out of, because it looks...
the trend line goes from the upper left to the lower right, Spencer.
I know, but I just would be curious how far above it we are right now, if at all. It looks like we're above it a little bit. Not really, actually. So, just eyeballing it. So,
all right. So that was an ugly one. Let's get to a couple of pretty ones before we finish this real estate conversation. Look at this one. This was a subsidiary of D.R. Horton.
Oh.
How do you feel about that?
I mean, if it's a subsidiary of a home builder, then I'm for it, right?
Are you like, why though? Tell me why you think that's the case.
Because they've been ripping, right?
Oh, the home builders. Fair enough.
Yeah,
that's a good way to put it. Yeah, I'll give you that one. Yeah, so this is a subsidiary. This is a little guy. Here, let me see. What is the market cap here? It's a smaller little guy.
1.5. It says right there.
So, there you go. So 1.5 billion. I was just refreshing my screen. 1.5 billion, breaking out to new all-time highs. Not too shabby. Does it pay a yield? I don't think it pays a yield because it's more of a home builder, right?
Let's wait. What's the ticker on this bad boy?
I didn't put the ticker symbol. The ticker symbol is it FDR? Why can I real estate development?
FDR.
Why don't I have the ticker symbol?
Yeah, no, I don't even know if that name is right.
No, hold on. I think the name is right. Where is it? I just had it. I was doing all this work last night. This is FOR. Sorry, the name is absolutely wrong. The name is Forrester Group.
Okay.
Forrester Group.
It does not pay divvy.
Forrester. FOR. That's my bad. Hilarious that I put the name of the. They're in real estate development. It's not the name of the company.
Got it. I was going to say that name is a little bit too on the nose.
Refresh it. Refresh that. And show the slide so you can see. That's my bad, guys.
It's okay.
Check that out there.
There we go. That's better.
There you go. Forrester Group. 4-star group. 4-star group. Forrester. FOR. Not bad, right? How many of these real estate companies do you know are making new highs? And then finally, this is the one. This is the one. If you're looking for a REIT, this is the one. Iron Mountain. So this is data centers. So like they
Yeah, I got it.
Instead of like public storage.
I used to own a data center ETF. It's doing better now, but not when I owned it.
It was an $18 billion stock, pays a 4% yield. If it's above 55, I like a long target of 75. But how many? I mean, granted, this isn't data centers. It's not like commercial real estate, so it's not where the pessimism is. But man,
you know what Iron Mountain? You know what Iron Mountain does? Iron Mountain does like Bitcoin, like cold storage. That's what they do. Like when they say your Bitcoin's in cold storage, it's in with these guys.
So it's not in a refrigerator.
Right. That's what I thought at first, but no, it turns out it's just in a mountain somewhere, in Iron Mountain. This was on the buzz a couple of weeks ago.
Yeah.
And yeah, caught my. So that's where it came on my radar, but looking good.
And then last question. Does the Dow Jones Industrial Average up 13 days in a row?
I know.
Do I hear 14? Spencer, do I hear 14?
I would feel like a lot more. I mean, I'd feel a lot more confident if it was like a Friday, because people like to end the week on a high note. But sure, why not?
They do in bull markets.
Sure, the trend is your friend. Why not?
Yeah, that's what I'm saying. Also, Dow futures are up 150 points. So, you're kind of getting a little bit of a heads up as to what's happening in the market today.
That's true. Should have called today's show the Tao of the Dow, because it seems like every day, because the Dow is the new king, at least in the last.
It's not the new king. It always was, bro. Aren't you listening? Are you not? Always was. Don't fight Papa Dow. You know how many I used to fight Papa Dow? People fight Papa Dow all the time. I don't know why. Don't do it. Stop. Don't do it.
You can't argue with being up 14 days in a row. You're or whatever. What is it? 13? 12?
13 and a half.
13 and a half. You can't argue with that.
7.
Not quite a half. But you can't
argue.
argue.
Take into the international markets, because futures have already been trading for 6. Futures have been trading for 15 hours already, Spencer.
6 p.m., right?
Yeah.
Okay, so yeah. All right.
And we're almost 3/4 of the way done with the day.
Yeah, that's true.
Right?
All right. The day's almost over, everyone. You hear that?
Well, yeah.
No. That's
not the market's fault that we live all the way west.
That was good. I mean, look, I'm definitely interested in. I don't own any real estate anymore. Like I said, I used to have some real estate, and I sold that ETF last year. Would definitely be interested in getting back in. These are some good names. I don't look at real estate tickers too often, but the few that you highlighted here are definitely worth noting. So thank you for that.
Not bad.
Yeah.
Some of those pretty good, right?
No, a couple of them really weren't bad.
For the
I mean,
record, there's some really shitty ones out there. So I mean, don't let me bringing in the good ones. There's some bad ones. This is one of them, but there's a bunch that look like that.
This one is interesting because I don't see you bring like. Not that this is unlike you. It's not. I wouldn't say it's unlike you, but usually you like charts that go up and to the right. This one is going down and to the right, but you're sort of highlighting it anyway, which I thought was.
I'm kind of just I brought it along to kind of put some perspective. Like, look at what these guys are doing, and then look what the Empire State Building's doing. You know what I mean?
Yeah, it's true, and it's so easy to find REITs that are just like I don't want to say like distressed, but yeah, actually, I will say
that's
distressed.
probably right. I was going to say that's probably right.
Yeah, yeah, distress is probably the good word to use, or just going sideways, right? Like SPG, Simon Property Group, is one of the larger REITs, right?
Yep.
This thing has gone nowhere for like six years at this point, right? So I don't know. Definitely worth paying attention to all the sectors, right? Not just technology, not just, and we don't just talk energy on this show. Some people have accused us of only talking energy.
Stop.
No one's accused us of that.
I was gonna say no.
I just made that up. I just made that up totally. All right.
Maybe in the back half of the year we might be talking a lot of energy. I don't know, Spencer. I don't know. The little squiggly line go up.
The squiggly line do go up. All right. Let's do some earnings here, and then we'll get Rob on the show. Man, we got a lot going on today. Let's see if we can rip through a few of these right now. What difference a year makes in meta? If I can, I'm going to bring up the chart here. If I can, I want to bring you all back to a year and a half ago is really what I should say. A year and a half ago. Okay. On the chart, see that big red circle? That was their report for the last quarter of 2021. It came out in January of 22. And if you go back to that report and you think, oh, well, what happened there? What's with that giant gap on the chart, that gap down? Well, their Facebook daily active users declined for the first time. And they're like, oh, by the way, we're spending like billions and billions of dollars on this Reality Lab, this metaverse thing, and we're losing money. And those streets like, what? You can't do that. And so that was then. This is now. They just reported last night. Not only did they come in above estimates on their top line and bottom line, but surprise, surprise, Facebook daily active users are back up again. Their whole family of companies or apps, whatever, daily active users, that includes Instagram and WhatsApp, that was up 7% as well. What else did they say? They guided, their guidance was in line. Actually, no, they did lower their CapEx guidance a little bit there, but that's okay.
Didn't they lose $21 billion building out a metaverse that nobody goes to?
Yes, they did. But I think for whatever reason, and they're still doing that. They're still spending like a drunken sailor on the Reality Labs thing, although I think they have toned it down a little bit. Let's see, we anticipate total expense. Oh, and now because of the Reality Labs thing, now everyone's focused on the total expenses. So they did say their total expenses will go up slightly more than they said last time around. But look, the chart says it all right there, right? I mean, this thing, that red circle on the chart, I think that was at the time the greatest market cap loss by a company in a single day.
No, you might be right. That was a big drop. Wow. I hadn't thought of it like that, but yeah, you're absolutely right. Listen, if it's above 300, you can't be short, right? The next target's new all-time highs. You know, I think you're in the 400s before all said and done. You got a nice little splitty split. They added to the Dow. How you doing?
Does anyone know what the population of Earth is? Because there's 3.8.
Yeah, 8.3 billion.
8.3. Okay, so there's 3.88 billion people on Facebook, Instagram, WhatsApp. I guess you put Threads in that category as well now too, right? So that's almost half of the globe is on a Facebook app, at least once a month, according to their however
8.04 billion. I
all right.
overestimated a little bit.
However,
8.04 billion.
however they define an active user, right? That's pretty it's pretty wild there. So
half the earth is on Facebook.
Half the earth is on an app that this company owns. Yeah.
Well, at least people are being productive.
Oh, that's true. Sad but true. Okay, let's move on here. We had eBay. It was a beat and a beat. Did they give any guidance? I didn't see any. Let's take a look real fast. Anything worth highlighting? Oh, they did. They gave guidance. A Q3 revenue guidance above the estimate. EPS guidance above the estimate. So strong.
It looks like they're guiding investors to the poorhouse. Stock's down 6% here pre-market.
Yeah, which means there's likely more inside the report.
Do you use eBay, Spencer? Do you use it? I use it.
No, I haven't been on eBay in quite a few years.
I buy random like old sports memorabilia, like old like pennants, Hurricanes pennants from the 80s. I got all kinds of random shit that I buy on eBay.
Oh. All right. Yeah, I guess that's what
like starter jackets. Like if you're looking for like a nice Dolphins, early 90s starter jacket, eBay's the good spot for that.
I still like if I had to sell something, I would still probably go to eBay. Although no, maybe not. Maybe I'd go to Facebook Marketplace. I don't know what I would do first.
eBay could be dangerous.
Yeah. In high school, we tried to start like an eBay business. It did not get very far. Anyway, chart. You know, Likey?
No, this thing's a hot piece of garbage. If it starts getting above 51, maybe. But in the meantime, leave it alone.
Okay. Let's go to away from tech and let's talk about food here a little bit. Chipotle. Apparently, inflation is hitting them pretty good. That's what they said. At least they cited Chipotle as basically the biggest reason for their sales miss last quarter. Comp sales growth that they guided would be in the low to mid single digit range. That's a little bit lower than it had been previously, but they just talk a lot about inflation, about food prices, about labor costs, and how it's eating into their margins. So that's why Chipotle is down about 7% this morning.
19 and a half, 1950 or so, 1960, which we are below currently with this gap down. It's those former highs from 21. If we're below that, there's nothing to do here, right? This is a failed breakout, risk to the downside. This is not anything that we want to own if we are below those late 2021 highs.
And then I'm trying to look at what Chipotle said their comps were. Did they say? Come on.
This is the Mexican. This is the Chipotle of Mexican food, as opposed to the Chipotle of Greek food, Cava, right?
Chipotle is indeed a Chipotle of Mexican food. McDonald's, on the other hand, their report was a little bit better. I don't think they talk about inflation nearly as much. Let's get that chart up on the screen. There we go. EPS beat, sales beat. Their comparable sales, and if you don't know what comps are, comparable sales, same store sales, it's all the same thing. It just means it's the revenue at stores that has been around for at least 1 year. So it's revenue at everything that's besides their new stores, right? Because obviously new stores, you can't really compare to anything. So their comparable sales were up almost 12% year over year. I guess McDonald's.
What's your Mickey D's order? You're a Mickey D's. What do you got?
What is my order? Oh, why I go to McDonald's like the only time I eat McDonald's is when I'm like at the airport. You know what I mean? And I have to because I'm like starving and
what do you get? You get double quarter pounder with cheese guy?
I don't know, man. I've had McDonald's like I don't know 3 times in the last like 6-7 years. I really couldn't tell you. Literally,
fillet of fish. You eat the fillet of fish?
Definitely not. I've never had that before. I've only been
McRib. Are you a McRib guy? Do you stand in line?
I do like the McGriddle actually. I do
McGriddle.
I do like the McGriddle. Well, because I've eaten breakfast at McDonald's, but I haven't eaten lunch there in so long. I don't even know if I could tell you honestly.
It's not that good.
But yeah, like literally the McDonald's in the Detroit airport is like the only McDonald's that I've been to in the last 7 or 8 years, probably at least.
All right.
So anyway, the chart. What say you? You like?
You said it earlier, Spencer. I like charts that go from the lower left to the upper right, and this is that. This continues to be a leader. This was a leader before there were a lot of other leaders, right? 290 is probably a good level there. 282, that's a good Fibonacci extension level. 280, 282, probably a good level. Right now, here we are sitting around 292, 10 points above that. Still an uptrend. No reason to fight this. Again, if you're above 280, you can't be short this thing. I don't own it directly. I own it through portfolios that I own, but so I'm in.
Yep. Maybe they must have said something on the call, or I'm not quite sure, because this thing was $300 a couple hours ago. Now it's down to 292. So maybe
This is the fifth largest holding of the world's most important stock market index.
I knew it was in the top half. I don't think I knew it was top 5, but
top 5 because price weighted, so $290 stock, right?
Yeah, that's true. Let's do. Oh, you know what? 9 o'clock. Shoot. Okay, let's pause the earnings and let's bring on today's guest, Rob Koyfman, who is the founder and CEO of Koyfin, and see what he's watching. Talk about Koyfin, talk about trading, talk about markets. I think Rob's ready. Let's do it.
Bring him out. Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Rob.
JC.
What's up, my man?
Not much. Great to be here. Wow, this is awesome. Stock Market TV.
Not bad, right? Not bad. We talk about the market. We talk about life. Rob, he lives down in Miami where I grew up, and he lives in a nice neighborhood in the beach, and he tells me I was like, oh, where are you living these days? And he tells me exactly where he's living. I was like, oh man, that's exactly where I would live if I lived in Miami. And Rob's like, yeah, you're the one that told me to move to this part of the town.
Right? No, you told me you used to go clubbing here at all the warehouses that used to be around here that are now like fancy condominiums.
Now back there, but I'll tell you a story about that 7-Eleven. You know that 7-Eleven that's right there?
I could see it from my window, yeah.
Yeah, I'll tell you a little story about that one day. That's for another time. But anyway, so Rob Koyfman.
By the way, can I just say the McFish that you guys were talking so negatively about is very good, and you probably
filet of fish.
So the fillet of the McFish, the fillet of fish is very good, and the reason it's good, it's one of the few items where it's not like chopped up, processed, and you're like, is this meat? Is this filler? Is it like it's actually fish? It's not bad.
All right. I've never been able to get over the hump of fish.
I know you think of like, but it's like, it's like pretty good fish. It's, all right. I hope it's frozen at some point and it's not just like sitting around.
That's why I go to McDonald's for the fish. First of all, I'm having omakase for lunch today down in Greenwich Village. Like, I am very excited for this.
I could see you bringing a bottle of Barolo JC to McDonald's and just pouring it out. And
for the record, I've actually had really, really nice red wine but not a Barolo. I would go maybe with more like a Sangiovese. But anyway, that's nor here nor there.
Wait, where are you going? Where are you going to omakase?
I don't want to. We don't want to draw any attention. It's a small joint. We don't want the crowds. We don't want the paparazzi.
Yeah, the paparazzi are going to go crazy.
You can't have that. I'm actually having lunch with Tom Lee, strategist. Yeah. So we're going to be, talking markets, eating a lot of fish, Okay. So Rob Koyfman is the founder of Koyfin, and Koyfin Charts is a platform that I use every single day. Literally, not a day goes by that I don't use it. I like it for I like the credit spread stuff. I like the foreign interest rates, foreign interest rates and foreign credit spreads, like, and the foreign yield curves and things like that. Like, that's tough data to get. And you could just punch it up real easy on your platform. I like the total return charts that you put together. I really like those a lot. Why don't you tell me what I'm not using that you think that I should use more?
I mean, the thing you're not using that a lot of people use, you don't care about, which is like valuation, fundamentals.
That's still a thing?
That's people, believe it or not, still use that. Yeah.
It's crazy. Shit.
It's the crazy CFA brainwashing institute that told people that those things are actually effective. And people actually use them.
Ain't that something? And then what else? What else do you think?
Wait, I want to know what's Rob. What's on like your, because you can make your own dashboards, right? Like, what's on your dashboard?
I have like a watch list of stocks that I follow that, whenever I hear something interesting that goes on there, and I try.
Like GameStop, AMC.
I don't think GameStop, AMC are on there. I could share my screen, and some of those stocks are probably, I forget what they do. I probably read about it and put it on there. I'm like, what the hell does this stock do? But a lot of the software stocks, a lot of the tech stocks, if stocks are breaking out to the upside, because my style is a combination of fundamentals and technicals and macro. That's how I look at the world. And so if something broke out and looks interesting, I put it on there. Constellation brands. I know you were just talking about your favorite kinds of charts. The charts are going from lower left to upper right. Those charts to me are sort of boring because they don't they're going up, and so they could.
You're not entertained by making money.
I'm not. No. The thing is, my experience is that something that's gone up already, so it's already gone up for at least a year. Whenever these momentum stocks reverse, it's pretty tricky to you'll have a stop and whatever it is. And so I'm not a big fan of holding something and then having to and then feeling the pain of a reversal and being stopped out at some point. And so what I love, my favorite kinds of charts are the ones that just start breaking out. So something that's been basing or moving sideways or can't figure out which way it's going, or something that's kind of had a resistance level for a long time and all of a sudden breaks out on a gap. Those are my favorite charts by far.
Rob, do you want to share your screen and show us a little bit what you see and how you use it?
Yeah, absolutely. So let me just
while you set that up, let me something I was talking about before. I've met the founders and CEOs of practically every charting software that's out there over many years, and you're the only one that's one of us, right? Like all of them are like coders and software guys.
You're talking about being Jewish, or
you said it, not me. Although that too probably. They're coders, they're developers that are getting into our game. You, on the other hand, you were working at Goldman Sachs, you're one of us, you're a market guy. You're not a developer. I mean, you are now a developer, but you know what I'm saying? So from an understanding what an investor and what traders need, you don't have to go ask somebody and hope that they get it. Right?
Yeah. I think that's a huge advantage that we have, is that the software that we're building, a lot of the functionality and a lot of the decisions I made is because that's how I look at the world. That's how I use the software. And so that's why we have a lot of macro indicators here. We really focus on charting because I love charting. I definitely am more. I've used certain things more than other things. So, for example, like technical analysis, I've used some basic things, and then I'll rely on my network, on people like you to really think about how to use a little bit, maybe something that's more advanced. But yeah, that's a great point, and I think the feedback we always hear is wow, this software really does the workflow that I needed to do, because it's made by people who have invested before.
Yeah, right, exactly.
And not some person in Silicon Valley that's wow, investing sounds interesting, sounds pretty easy. Let's try and figure it out and code something up. So yeah, thank you for saying that.
Any new features that you want to show off? What's happening there?
Yeah. So just to kind of give people a overview of Koyfin, so web-based platform, we have a pretty robust free plan, so you could sign up for the free plan and really do a lot of powerful analytics there. But this is the home-based dashboard. A lot of people on here throughout the day, just seeing kind of how markets are moving over the past 5 days, one day, and you could check off the boxes here. And then kind of this menu is set up in different categories, but here are those kind of most popular functions. Market movers, something that I look at every day. You select an index or an ETF or one of your watch lists, and really see what's moving the most on the most volume. So the y-axis is kind of the price change. The x-axis is what's moving on the most relative volume relative to the past 10 days. So if Boeing is up 10% or close to 10%, it's really important that it's up on 3 times or 3.5 times volume. Same thing with UNP. A lot, I'd say, more important than if Zion is also up about 8%, but on less volume. So just kind of like as we think about filtering and distilling information, this volume gradient is pretty important. And so like a chart of Boeing we talked about before. I'm just gonna open this graph like here. Like this is one of my favorite charts. Like if I had no idea what the stock does, then kind of like consolidating for 8 months and now breaking out to a new high with, let me put some volume on here, notional volume, on $6 billion worth of volume, which is the most volume that it's traded. That's a really, really nice chart for me. That would get me super interested. I would go in, I would try to understand what this company does, what the story is, what the bull case, bear case is, why the story might be changing, stuff like that. So that's how I would kind of use the system with the movers and with the chart. And then you asked about kind of like some powerful features. Watch list feature right here, super powerful. This is where you get to set up your watch list. These are a bunch of watch lists that I have that you asked about, kind of like what companies am I following. And so these are all the companies I'm following. And then the real power of this is being able to choose any of these columns. So we have columns here that have to do with valuation, technicals, earnings revisions, analyst estimates. We have this measure called percentile ranks, which basically ranks on a scale of 0 to 100, where the current metric is versus the history and versus other stocks. So if you're thinking about like, if you care about valuation, let's say you care about price to earnings, I could look at where the current P ranks versus the country, where it ranks versus the past 10 years or 20 years. So let me put the past 20 years and show you what that looks like. And so what this tells me, if I sort this, is Oracle's trading at the 94th percentile versus the 20-year history. And then Square's trading at the 8th percentile versus the 20-year history. So a really fast way to filter something, but you could really customize these columns however you want. And then the last thing is really the screening tool, is to be able to screen by any metric. So if I hit this plus button on top to create a new screen, being able to then filter by security. So, I know you like stuff that's trading near its 52-week high. So let's say below 52.
Well, in bull markets.
In bull market. Thank you.
If your stock's not near a new 52-week high in a bull market, you're probably in the wrong stock.
Yep. So, so this is, this is kind of how. So there's, we're filtering down. So this is in U.S. and Canada. We'll just do U.S., United States. There's let's see here. There's 8,000 stocks or 9,000 stocks. 611 are within 3% of their 52 high. And then you could have other criteria. Like I know, JC, one of the things that you talk about, which I love this screen, is looking at stocks that are going up, but that analysts don't like, that are like sell rated or the Wall Street community doesn't like. So you could do that screen by going to ratings, by seeing where the analyst average rating is 1 to 5, is 1 is a sell, 5 is a buy. So let's say all the stocks with an average rating of 2 and below. So it's kind of like sell. So there's
tough living being a sell side analyst.
Not a lot of stocks there. Let's see what the 2 stocks there are. And it's Moelis and MG Energy. So those are the only 2 stocks that are kind of Excel rated and are trading near their 52-week high. So you could adjust these little bands to catch more stocks. Maybe it's 5% within the high. Maybe it's stocks that are going up. But those are kind of like some of the popular features on the screening on the dashboard. And then our graphing tools are just kick-ass, where you could graph any sort of valuation metric, any sort of fundamental metric.
Listen, Rob, before Spencer kicks you out of here, the demo was great, by the way. And for those wondering, like, it's not like Rob's paying us to be here to show this off. Like, this is legitimately a tool that we use every single day. Not just me, the whole team. Everybody uses it. Some more than others, by the way.
It's true.
For different reasons. And if you're not using it, you're at a disadvantage. I mean, I literally use it every single day. That's true. And I'm also an investor, full disclosure. in Koyfin. So I'm also rooting for you. And I like the guy. I like this Rob Koyfin guy. So I'm rooting for you too. Let me ask you this. All year, everyone's been pessimistic, bearish. It's only 7 stocks going up, JC, blah, blah, blah. Obviously, we take the time to actually count around here. And it was far more than, it was thousands of stocks ripping in your face all year, as it turns out. Why don't you talk to me about the back half of the year? Wall Street has its most bearish second half outlook ever. Speaking of sell side analysts, you're seeing large speculators still very, very net short, huge cash positions by fund managers. I mean, is the pain trade still higher? S&P 5,000 before Thanksgiving? Is that what you're calling?
I think so. I like the way you look at the market. I think about the market in a similar way in that I kind of like read the tea leaves and look at all the momentum that's happening, and it's pretty broad based. It's not just the Magnificent Seven, whatever it's called. I think I really like your call of a rotation of thinking about kind of like looking at the catch up names. And thinking about some of the laggards, like looking at the energy stocks and looking at the financials. That's really interesting. Again, that makes me a little bit less nervous than looking at buying the tech stocks, which have run so much, and there's a chance of a pullback and stuff like that. So
European banks making new 52-week highs, man. Like where I grew up, like that doesn't happen in bear markets. Like if the world's falling apart, European banks are going to be front and center, leading the march down to zero. Right? They're not going to be breaking out to new 52-week highs,
Yeah. One of the things that I like trading at its highs is Mexico. Just looking again at this long-term chart, even though it's run
EWW.
You have, I think you have a lot of macro tailwinds here from investment coming from Asia into Mexico. You have a really solid play and tailwind from demographics there. And you have, I think you benefit from the equity, and if you're long the ETF, you benefit from the currency. So if you look at kind of the currency here, again, if you look at kind of like the entire thing, like this thing over the past 10 years was going one way, and that trend has that trend I think looks like it's going the other way now. And so you sort of benefit from the Mexican peso strengthening as well if you own the ETF.
And another interesting correlation between the Mexican peso and the volatility index, when you see the Mexican peso going up, that tends to happen in lower volatility regimes. So the inverse correlation between the VIX and the Mexican peso there, Rob. Nice one there for you. Take a look at dollar peso and the VIX tend to move together. So as the dollar peso rallies, that's happening with fear. And that comes just back to Mexican peso as a gauge of risk appetite, right? They're not buying Mexican pesos as a flight to safety, right?
Yep. Makes sense. Kind of like the dollar trade, the volatility trade being related. That makes sense.
All right. Rob Koyfman, founder and CEO of Koyfin. Guys, I put the link for Koyfin in the chat. Check it out. Rob, thanks for coming on.
You're the man, Rob. Come back soon. We'll talk
Thanks for having me, guys. Have a good one.
Let's demo more markets on the next one, maybe.
Yeah, a little bit. No. Actually, I like the demo because I'm one of the people that
we did the demo now. What we should do is we should just do like a whole webinar. We'll do like an event, and we'll really break down, and we'll bring it to our audience.
I need because I use Koyfin too, but I definitely don't get the most out of it. So
I mean, listen, you can ping Rob. He's really helpful, or you could just like ping like Grant or Alfonso. Like they can really help you out too.
True. All right, we got Kimmy here. Let's see what she's watching today. Kimmy, going through yesterday's trades. We got some Google. We got some Microsoft, right?
Micron, Rivian, Meta, 5 for 6, Kimmy. Have a day.
It was a good day. I took profits quickly because of the Fed, and I felt like the market would go to sleep before the Fed, which it did. And then it was very volatile. It was up and down after the Fed. So I kind of like backed away around 10:30 or so. Felt like everything just went in a low.
So I like how you're highlighting T-Dot coming into the day, 27% up yesterday. What are you trying to do here? You fading this?
Yeah, that's interesting.
No, I'm going to watch it in here. So
from the long side after a day like that?
Well, it could base and pull in, so it might not trigger. It might not be ready, or you get in it and it fails, right? So I'm trying to see. I've had alert there like 29.10 for a while, and it triggered, so it brought my attention. So I'm actually going to watch it. That doesn't mean it's ready to go, and it could fail. Sometimes you take a trade. I'm seeing if it can have a continuation, not necessarily today, but
What are your thoughts on this FOMC thing? Nobody cares. No big
nobody.
deal.
I guess nobody cared.
Nobody cared. It probably shouldn't be a surprise, right? Everybody knew what they were. Even someone like myself who doesn't even pay attention to this stuff, like even I know that everybody knew what they were going to do. So they did what everybody knew what they were going to do, and all
And
right,
that's it. Moved on.
turn the page, right? No big
Yeah,
deal.
so a lot of things are gapping up. Gap ups are hard. They're names that I am looking at. I got my little list in front of me, my chicken scratch, So I got a couple names.
Show us the chicken scratch. Show us.
Let me get you a messy
Don't
one
worry,
when there's
don't
like
worry.
100 of them on here.
We can't read it anyway, so it's
You
fine.
can't read it anyway.
Here, wait 1 second. Let me make you bigger so we can see.
Let's see,
Yeah,
chicken
there it is.
scratch.
There it is.
Can't read that.
Sometimes I look, I go, what did I write? Because I can't see what I even write.
All right, so I like that, Teledoc. And talk to me about the overall market. Just resiliency, right? It's tough. It's tough to have any shorts
Yes.
that are working for more than a day or two, huh?
That is true. That is true. I'm looking at Boeing though. It's starting to get extended maybe for a short. So we'll see. We'll see if it pushes. Not saying, just for a counter trend trade. Let's see what it does around this 235 area. It could push towards 240. So I have to see. So I would take it small. My shorts are always like 90% smaller than my longs, just in general, right? So if I take a short, I'm not going to bleed out because I make them small. They are small and versus my long. So obviously the market's trending higher. I do, I push up, I get more aggressive on my longs versus my shorts. So
Makes sense. I like it.
Sometimes, whatever it is, I'm going to see Valero had earnings today, I think this morning.
Oh, did they? There's so many. Let me see.
So
pre-market.
we'll watch that, see if it gets going. Nike's starting to wake up a little bit.
Nike.
Yeah.
Nike's starting to wake up a little bit. This is a little bit of a laggard.
Oh, such a laggard, but that doesn't mean it can't move.
Hey, listen, in bull markets, you get rotation. The laggards become leaders. That's what happens. Sector rotations, the lifeblood of a bull market.
Yeah.
Don't hate the player, hate the game.
Yeah, so I got my little list here. I'm looking. Gap ups are hard, so we got to see if they pull them in a little bit and then continue higher. So, we'll see.
All right, guys, if you want to join Kimmy's room, she's there every day, live trading through the open and into the day. You can scan the code, click on the link in the chat, click on the link in the description. But it is premium. It is private. It is not open to everyone, but she does trade and call out her winners there every single day. And we talk about her trades, but we don't go really as in depth as she does in other rooms. So if you want to get, more, I guess just more access, the room is the best way to do that. So Kimmy, have a good one.
Guys. Have a good one.
All right.
Go get him, Kimmy. Yo, she is crushing, dude. She's
her just win-loss ratio is something else, man.
I've never seen anything like it, and it's not like I'm sheltered. Like I probably know more traders and investors in more countries than most people that have ever lived on this planet, right?
Yep.
I mean, you could probably throw that out there. At least in the conversation. And I've never seen anybody even close to what she pulls off every day. I've never seen this. It's crazy.
Okay, let's do a couple more earnings real fast, and then we'll get to the hot corner. I want to go to Royal Caribbean. I was curious about this one. RCL. Where are the numbers? I just had them up. I think because they're out at 8 o'clock. I think it was a beat and a beat. Yeah, the stock is up 10% this morning. A beat and a raise, a guidance raise. So demand for cruises appears to be strong. I was wondering what they were going to say about that because the stock has been strong, as you can see. But sometimes the report is just that good that the stock rallies anyway. It appears to have been the case of that.
Dude, both of these things, I mean, these things doubled so far this year. Literally, I mean, just absolute monster. Absolute monster. And, getting back to like consumer discretionary, it's not just the home builders. It's not just the casinos. We're seeing it in other areas too. You can even throw airlines in there. Like airlines aren't consumer discretionary, but like they are. Like they're really industrial stocks, but like,
Dude, the
are
airlines,
they?
what a disaster. You had Southwest reported this morning, right? And the stock is down. Oh, it's only, I guess it's only down $3. I thought it was down more than that. But that report wasn't particularly good.
The airline index up 60% in 3 months. Like let it have a little breather, right?
I don't know, man.
Well-deserved breather out of the
all the airlines that I look at, like, yeah, 3 months, that's cool, but I just look at like the last few years and they all look terrible. Like I think the best of them
but
is
what happened over the last few years? Not to get all fundamental on you, but like there was kind of like this pandemic where like nobody was allowed to leave
all
their
right,
house. I don't know if you
fine,
heard.
fine. The last like 7 years, right? Like even like Delta, which I think is the best performing of the bunch. Delta is like flat over the last like 8 years, 9 years.
Also, airlines are just shitty businesses. Aren't
That's what I'm getting at. It's
Yeah.
they're shitty businesses, really.
So are, for the record, so are restaurants, and there's some restaurant stocks that are doing well, right?
Yeah, there are a couple.
People are like,
okay.
"Oh, JC, you know, because you know I like to cook and stuff like that." Like, "Oh, you should open a restaurant." I'm like, "Dude,
No,
should I just light my money on fire?"
you don't own a
Give
restaurant.
myself the aggravation.
Restaurant owns you.
That's right. Oh, I like that, Spencer. That's true.
Yeah,
It's true.
No, let's do a couple more. Big gainer of the day is Celestica. I don't actually know what they do. CLS is the ticker. It's a supply chain solution. Okay, anyway, their earnings cross-shaded beat to beat. The long-term chart is a bit of a train wreck, but like the 20-year chart, as you can see. But the short-term chart is looking pretty damn good. And again, it's up 20%, 24% this morning.
Supply Chain Solutions, $2 billion company out of Toronto, eh?
Hey.
Big fan of Toronto. Listen, I like this base. What's there not to like? You know, what are we looking at? What's that level there? This is CLS. I'll give you the level. Let's call it, man, you know, you could probably call it 14.5. 14.5 is probably a good level. Above that, looks fine. And now we are all the way at 20. So you're looking at a target of about 2021. We're kind of running into that as we speak. These are those former highs from 20 years ago, back in early 04, believe it or not. A little bit of trouble here. If we can start to get through that, you know, we start to get into 22, start to see 23, you know, maybe we can get a real run back to those former highs from 2000. Maybe. It's a nice base, right? It's a nice base, nice little double bottom there. What do you think?
Oh yeah, I mean that's why. First off, I saw it because it was up 20% this morning, and I looked at I was like, yes, I agree with you wholeheartedly. but I never heard of this stock before.
24%. It's crazy.
Before 2 hours ago. Let's do one more. Let's do Lamb Research. I think the chart. Some charts are not interesting. Some charts are interesting. This chart I think is interesting. They reported last night after the bell. EPS beat, sales beat. And did they give guidance? They did give guidance. It was essentially in line, but the stock is up
5%.
Yes, thank you, 5%.
So this is semi equipment, $87 billion. This thing's a monster from Northern California. Shocking. You know, it looks a lot like ISRG. You know, kind of still battling with those. I mean, granted, different businesses. Intuitive Surgical, but it looks very similar. I'm going to show you guys, right? Doesn't it?
Wait, can I just read this comment? Sorry, I was distracted. I was reading this comment from Caesar. He's not satisfied until he hears JC do his JC pretending to be someone else.
What, you don't like my impressions?
I didn't say anything. I'm reading Caesar's comment.
Here. You like when I do the other people's impressions? This is Intuitive Surgical, ISRG. Take a look at these things. Tell me that they don't look exactly the same. Go up towards slide 1 there. Take a look at that bad boy. Look at that.
And we're off.
They look exactly the same. Sort of like battling those former highs, right?
Yeah. That's interesting. They're not at all the same business.
Yeah, but they're not in the same business. One of them is medical equipment, which is technology. The other one's semiconductors, which is technology. One of them's Lam Research is $91 billion. ISRG is $116 billion. Like a lot of similarities, similar market cap, similar, sort of growth bucket.
Yeah, well, so that's the thing about again categorizing stocks, right? Sometimes it's easier said than done. Like ISRG is a healthcare stock; it's in the healthcare sector, but it's
technically
right. That's what I'm saying. But it's really a growthy techish name.
They're like robots that perform surgery, like
right. So yeah, it's healthcare. And sometimes you get that. Sometimes you get stocks that companies that are categorized in one sector or one industry group, and while that may be true, they really behave like another one. In this case, ISRG behaves pretty techy because of it is robotics. It is it's medical devices, right?
So they look the same. They look
the
same.
Interesting call out. I would never have guessed that, but the more you know, I guess.
I look at a lot of charts, Spencer. I don't know if you heard.
It's this much is clear. Okay, hot corner. Well, let's get to that right now.
Do it.
Hot corner. So hot right now.
Okay, what do we got this morning?
I like the Todd Sohn. First of all, the chart report. Shout out to the chart report. Maybe my favorite email. Tied for first with the hot corner. Tied for first. My favorite email gets right to the point. Saves me a ton of time. So does the hot corner. Saves me so much time. This one, I don't have time to sit around like Spencer and just look at Twitter all day. Some of us have to work around here. So to get that email at the end of the day with the best tweets from the best technicians in the world every day is really helpful.
Yeah, wait. Let's do the hot corner real fast. So we have a smaller transaction from AIG from William Jurgensen. Hope I'm saying that right. And a handful of bullish, unusual options activities. The largest transaction being in speaking of medical devices.
Who's this
wow.
William Jurgensen guy? $145,000. What kind of piker buy is that?
I said small. And speaking
Shouldn't
of medical,
have even made the list. $145,000. I don't even get out of bed.
Speaking of medical devices, we got some unusual options bullish in Medtronic and Boston Scientific.
That is true. Interesting sort of call out there. The Boston Scientific. I mean, this thing's a beast longer term. This thing's been breaking out for some time. How many healthcare stocks making new all-time highs?
Wow. Look at that you gotta go back to what, 2003?
This was a 20-year base, man.
2004?
Yeah, this thing goes all the way back to the 04 highs. Yep.
Holy cow.
We
must be in a bull market.
Yeah, I don't know if you heard. Literally, stocks go up every quarter. By definition, in bear markets, that doesn't happen.
No, it doesn't. Wow, that's pretty remarkable. Wait, what else was on the list? Spotify. What? I totally skipped over that. Completely missed Spotify there.
Big transaction on the spot. Yeah, it's messy. It's got some work to do. For the record, is PayPal? I'm being accused of not being in technology. Is PayPal's technically not tech, but
it's not, it's finance.
But it is. Let's be serious, right? It is, but it isn't. So I'm in. First of all, Joe, I have in my long only portfolios. I own a lot of tech because that's just an American thing to do, is just to have a lot of tech exposure. So I do, just on my individual stocks that I own, I do not have a direct investment in tech. I guess the closest is probably PayPal, and I'm in this AbbVie also.
It's not
tech. It's a drug manufacturer.
Yeah.
But it is up 3.5% today. One for the good guys, I guess. PayPal's in the XLF. I know it's like credit services. I know. But is it though? Like, is it a financial PayPal? Maybe. I don't know.
Have you seen some of these like EV names, like not Tesla, like Neo?
Yeah, we talk about it on the show.
And Rivian.
Yeah.
And today, QuantumScape. Isn't QuantumScape an EV name? I'm pretty sure it is. Don't they do like charging or something. Let me see. What does QuantumScape do? I should know this.
I
They
don't know.
do.
Neo's up another 4% today.
Yeah. They're a EV battery play. They're up 18% this morning. Dear Lord. Yeah, all these EV names. Rivian too. They're all ripping. Holy moly.
Rico Lay says JC is loud like a Cuban. There's a good reason for that. I'm OG, 100% Cuban, first generation born in America. What a country this America is. What a country. The American dream. I'm living it, right? If only my grandparents, when they came from Cuba in the early 60s, if they knew that I would be co-hosting the best morning show in finance, they wouldn't have believed it. They wouldn't have believed it, Spencer.
No, they wouldn't have. They would have said, "What's YouTube?"
Right. They would have said
years ago. I gave up trying to explain to my
they didn't
grandparents.
have technical analysis in Cuba.
No.
No.
Wait. So here's that Neo chart. Just look at these three: Neo, Lee, and Xpeng. Right? XPEV. They're all Chinese EV makers, and they're all in wicked uptrends.
JC is the Tony Montana of stocks. You know something, Spencer? Fun fact about me: I've never done any drugs in my life.
You're just high on life, man. That's what you are.
I never did any drugs because, growing up in the late 90s, partying in South Beach, like everybody was doing drugs. And I don't know, I was like an athlete. I was like maybe a little scared. Like I just didn't want to do drugs in high school. And then I got to college and I'm going to college in Connecticut and everyone's doing drugs. And I'm like, well, I'm too old for that. I didn't do drugs in high school. I'm not going to start now. Right. So I didn't do drugs in college. And then I get to Wall Street and everyone's doing drugs, of course. And I'm like, well, I didn't do any drugs in high school or college. I'm not going to start doing drugs now.
Smart.
So I just never got around to doing drugs.
That's smart.
Isn't that funny?
Yeah. I mean, I'm much the same way. Yeah. Okay. What else here? Oh, thank you for
Can we do the hawk? Can we do the
thank you
report?
Thank you for the compliment, Tactical Spray. We appreciate that.
Okay.
Chart report. Yeah.
Chart report. Come on, let's get it. Right. I like the VIX chart from Todd Stone. By the way, can we get Todd Stone on the show?
Yeah. You mean get him back on the show? Wasn't he on the show like a month or two ago? I feel like he was.
Was he?
Actually, I can check right now.
You know what? He was on the show. You're right. He was on the show. Of course he was.
Todd Stone was on the show.
You're right. He was early. He was one of the first guests.
May 25th. So yeah, 2 months ago.
You're right. Get him back on the show then. I like Todd.
You want to scroll down to Todd's thing? Okay.
Yeah.
We scroll. There we go.
So low V. We talk about a lot about how volatility is mean reverting in nature. Asset prices trend. Volatility mean revert. So when you see a VIX under 14, where's the VIX today? The VIX is down against a price of price under 13. Wow, under 13 VIX. Under 13 VIX, down up 13 days in a row. How you doing? So it basically, Todd is just pointing out that just because it's low doesn't mean that it's a negative for stocks because volatility needs to bounce and that's going to put downside pressure on stocks. Quite the opposite. This is just typical characteristic of bull markets. I thought that was a nice point out there.
Yeah.
Todd Stone, friend of the show. Bring him back, Spencer. Why aren't you bringing him back? Why it's taking you so long?
Actually, to be totally transparent, the guest schedule for next week is looking awfully barren. That's on my to-do list.
Strazza, I got confirmation this morning. Steve Strazza will be back on the show on Monday.
Oh, man. Are they actually on their way home?
They're on their way home, back on the show on Monday. Speaking of the boys, can you throw up Alfonso's chart? Shout out Alfonso making the top 10 yesterday. Throw that one up there.
There we go.
Looking at Steel. Steel looking good, man. Even like Howard Lindzen. Like the fact that Howard Lindzen is talking to me about steel stocks. Like, what planet am I living on?
Alfonso and then also Ian Culley's talking about this chart. So yeah.
Well, fine. But Ian Culley, it's his job to talk about this stuff. Like Alfonso can talk about anything he wants, and he's calling this one out. Like Ian should be talking about this, right? But the fact that Alfonso, Fonz is a little more diversified in his approach, I think. And the steel index, man, how about that?
You know what? There's getting to be. I'm glad I raised a lot of cash at the end of the year because there's so much stuff to buy. I can't buy it all, but I would like to, right?
How about this? I made the top 10 report. Not to cut off your irresponsibly large cash position this year in a raging bull market. I wanted to point shout out to me making the top 10 yesterday. Shout out me. Honestly, this is a great chart. Granted, I know it's mine, and I'm talking my book here, but this is a great chart. Shows gold in gold. You see what I did there? And then in black, it's gold relative to the S&P 500. So as you can see on the left side of the chart, this was in the 2000s. This is gold making new all-time highs and also outperforming the S&P 500 all along, which is a friendly reminder that just because gold is doing well and outperforming doesn't mean stocks need to go down. Stocks were in a raging bull market from 03 to 07, and they were underperforming gold, and gold was doing great. So they can happen simultaneously. But then since 2011, gold has kind of just been flat, really been a loser of a trade. And then you could really see what a loser of a trade it has been when you see how it's performed relative to the S&P 500. So just the opportunity cost of being in gold versus stocks over the last 10, 12 years has just been a real bummer, So shout out to everybody who has not been in gold.
Maybe the tides are turning. Only time will tell.
And this whole thing, like you always should own 5% of your portfolio in gold. That's the dumbest shit I've ever heard.
That's silly.
Right? Somebody wants to, you have to own some gold, JC. It's an inflation hedge, JC. No, it's not. Maybe a hedge against profitability. It's certainly not a hedge against inflation.
I also don't even know how owning gold at 5% is going to save you from inflation when we have.
Also true.
It won't.
There's no evidence ever in history that gold is an inflation hedge, for the record. Like this one time in the 70s, we had inflation and gold did well. And like, that's all the evidence that like they dedicate their entire lives to being gold bugs because of this like one time in the 70s,
Yep. All right, guys, if you want to get the chart report, it's a free daily email every single day in your inbox, usually around like 5 p.m., maybe 6 p.m., somewhere in that time frame. Just the list of the best charts that Patrick saw today on Twitter. It's a very enjoyable read. I have to say, it takes like under a minute to go through it, and sometimes really makes you think, right? Really just makes you go, good chart. I didn't know that. So I always learn something new every single day in the chart report. Scan the code on the screen. Use the link in the description to get the chart report. Okay.
Can we talk about this AbbVie? I'm having a day today on this AbbVie on the open. Look at this thing is ripping a 5%. What did they do? Cure cancer? What happened over here?
That'd be bad news for the stock, I think.
Oh yeah, that's probably right. It's up 5%. Any news?
Hold on. Yes, we do have the news. We always have the news. News flow. Yeah, it was earnings was it this morning? Yeah, it was this morning. Earnings beat, and they raised. Well, what happened here? They raised their guidance by how much? Not by that. Well, they raised their full year EPS guidance by $0.50. Looks like. So that's interesting. It says a lot of that is due to. I don't know what these drugs do, so I don't want to say too much.
I don't know what they're doing, but shareholders seem to like it. My options are up 60% today. Are you kidding me?
Sykrizi, Sykrizi. I don't know what that drug does.
I don't do drugs.
The conference call is happening literally right now, and so the stock is. Yeah, you know what they're doing here is on the call. They're raising their sales outlook for specific drugs like one at a time. I think so. They raised their sales outlook for Sykrizi. They said all their neuroscience drugs. They raised their sales outlook for that whole portfolio by $300 million. So that's what's happening to AbbVie this morning, and that's why the stock
PayPal's working out nicely for me as well. My technology exposure.
I want to give myself a pat on the back for my Mattel trade, just knowing when, although it is up.
It's making new highs. You sold it too soon.
It's not making new highs.
It's making new highs. It's making new highs. It's just not making new highs in your portfolio because you don't own it anymore.
What's the high from the other week?
It's making new highs, bro.
20. It's right. It's literally right there. It is literally right there.
You could justify not owning it any way you want, but it's making new highs for everybody else's portfolios.
I wrote it out from 17 to 21 and then saw the news, and it spent the last 2 weeks doing basically
nothing. Let me tell you something, Spencer. Let me tell you something, young lad. This is something that you need to learn. In bull markets, you're going to be frustrated because you're going to sell too soon, right? That happens all the time in bull markets. You're going to sell too soon and it's going to be frustrating. That's the type of thing that happens in bull markets. You sell things for profits and they keep going without you. Like, that is just classic. In bear markets, that doesn't happen, Spencer. So just, this is just something to think about. And I'm not just picking on you specifically because it's literally happening to you as we speak, but just generally speaking, that's what happens, right? That's what happens. So keep that in the back of your mind.
Yeah, well, no, I actually, because last time I looked at Mattel, it was down pre-market. And there it is then, and there now it is above 22. So okay, well, they had earnings this morning or last night, whatever. Anyway, everything you said I agree with. I would rather sell too soon. Tis better to have sold too soon than have held on too long and watch your gains become losers.
Yeah, but there's an old saying on Wall Street that you'll never lose money taking profits, but that's bullshit. In bull markets, you really want to let your profits run. I'm telling you, the whole that whole you never lose money taking profits. It's not true. In bull markets, you better take advantage of the fact that it's a bull market because it ain't always one, right?
That's true. And hey, speaking of bull markets, did you hear that there's not going to be a recession? Probably. That's what the Fed said yesterday. So
ask me how many fucks I give about your recession. Ask me how many.
What recession?
How many fucks do you think I give?
Zero for zero, but there is no recession. That's the whole point.
Yeah, recession. Yeah, whatever. I don't have time for that. Listen, recessions are an option. It's a choice. You can either choose to go through a recession or not.
But not everyone has that choice. By the way, I loved John Neto's reaction yesterday to the Fed. He sends us his instant take, and this is going to be, what he does for anyone that signs up for his product. And he goes, "This was a snoozer, total snoozer." It was like he was so disappointed in in the market's reaction or lack thereof, really, to the Fed thing yesterday. He was like, this was nothing.
The Fed thing.
Yeah, the Fed thing.
That I actually listened. I gotta make a confession. I actually listened to the Powell speech. I got conned. I swear to God. I got conned into this. I shouldn't say I got conned. I accepted an invitation to go on that guy Mario Nawfal. Mario Nawfal.
Narwhal.
Yeah. Narwhal. I did the I got to the Twitter spaces, right? And he gets like 10,000 people for these Twitter spaces. So I was like, yeah, I'll come in and I'll make fun of economists and talk about price trends and stuff like I always do. And the first half an hour was great. We're talking about the market. And then all of a sudden they just turned on the Powell speech like half an hour into the thing. And I sat there like an idiot listening to this damn speech. And it wasn't so bad. I thought it'd be a lot worse because I haven't listened to one of these things in a decade, over a decade maybe.
They're pretty bad.
It wasn't so bad. There was like Q&As. Like there was kind of like, I kind of like because I didn't see the people asking the questions, but I can like hear. So it was like the Valley Girl, like, oh my God, so it's like a bull market, and you think like a recession's gonna come, and then right. And then there was some other guy like with a Boston accent, and then there was like, hey, yo, so like I don't know. I feel like for these speeches there would be like more like professional asking questions, but it seemed like I don't know. It seemed like a high school.
It's the same. It's the same people every time. It's like literally the same. They call on the same people every time. Yeah, it's Steve.
I wouldn't know that.
Steve Leisman always gets the first question from CNBC.
Does
he? Yeah, and then it's like they give the Bloomberg reporter, the New York Times reporter, the Wall Street Journal reporter.
Let me tell you something about Steve Leisman.
Oh God,
this guy is the man. This guy is the man. Have you ever seen him?
I have never met him before.
He's the lead singer of a Grateful Dead cover band. You know that?
I did not know that.
Dude, you got to see him. He wears like his Bermuda shorts and his Jerusalem Cruisers, and he's just chilling there playing his guitar and singing. He's the man. I'm not even like a Deadhead. I'm not into the Grateful Dead at all, but
me neither.
I've gone me and Josh Brown and Dan Nathan back in the day. We'd go always see his shows in Brooklyn or down in the Village. He's actually really good.
All
If you ever
right.
get a chance to see him play. Actually, he played at the Josh's conference last year. He played a little bit.
Huh?
I think he opened up for Big Boy.
All right.
Little odd.
Hey, you know we haven't mentioned today. We mentioned the fact that the guys are on their way home, but we didn't say what they're on their way home from. Guys, we're doing a documentary. We just sent a group, a team of 4 people to Asia for a little over 3 weeks. They left on July 4th, and they're getting back, I guess, today. Is it today or tomorrow? I don't know what the time change. But anyway, we're doing this documentary. It's all about how do people across the world in Asia, how do they approach the markets? What can we learn from them that we can apply to our own trading and our own investing? It's called Wall Street to All Street. So if you scan the code on the screen, or click on the link in the chat, click on the link in the description. It's at the top of both those things. That'll take you to a sign up page. We're going to host private screenings. It's going to be an episodic thing, so not like a 2-hour feature, like 1-by-1 episodes, 1 episode for each city probably. And we're going to host private screenings, do some Q&A, show behind the scenes stuff. It's going to be freaking awesome. So scan the code and you will get invited when we actually do those things. And the rest of you will be able to watch it way later after everyone else, right? After the people that signed up. So check it out. Scan the code.
Who came up with the name? I think Giancarlo came up with it. But it wasn't me.
It was... Actually, I have the Google Doc where we had like 100 names. I don't remember who came up with this one. I think it was down to a couple. And this was like the least bad of the names.
Yeah, because, at the end of the day, what we're doing is, we're interviewing traders from around the world because a lot of investors in America and North America in general haven't had the opportunity to go to Jim Rogers' house in Singapore or, hang out in Manila and eat 3 dinners. Like, most people haven't had the opportunity to do those things. So we interview them and bring that information and, that perspective back to traders here in North America. That I find so much value from my experiences overseas over so many years, not just in Asia, but in Europe and everything like that too. And, I wanted the same experiences for my right-hand guys in Sean and Strazza. Might as well bring the old camera crew with them, right? That's how I looked at it.
Yeah, I'm looking for my doc now that I had. I can't find it. We had a doc of like 100 names. Some of them were really bad. Maybe that's one of the things we'll talk about during one of the screenings. But yeah, we had some bad ones. Okay, 9:53. Let's do.
Recess.
Hold on. Let me make sure I got to my list. There was a couple more things.
Recess.
I mean, obviously, we did not cover nearly all the earnings. There was MasterCard. There was Bristol Myers this morning. Who else did we have? We had Service Now. We had Southwest. We didn't really talk about Honeywell.
Mr. Cooper in the house.
What?
Mr. Cooper. You don't know hang in with Mr. Cooper?
No, what is that?
COOP. You don't know Mr. Cooper? Here.
No.
Come on, Spencer.
Don't know it. We had, who else did we have?
Throw up slide 1, Mr. Cooper.
Tonight we have Ford and Roku. That's interesting.
Throw up slide 1 there, Spencer.
Okay, slide 1. What do we got?
Mr. Cooper in the house. This is a mortgage finance company making new all-time highs, which is not a characteristic of a downtrend. And it's a $4 billion stock. $4 billion mortgage finance out of Texas. Shout out, Mr. Cooper.
It's interesting that you're bringing this up because yesterday I mentioned, I think off the air, UWMC and Rocket, RKT. UWMC, obviously they both collapsed in the last 2 years, but UWMC is on a bit of a ripper here, last 8 or 10 months or so, or the last 12 months. Actually, it's a 52-week high. It's actually almost a 2-year high. So anyway, so Coop, this too though, that's all-time high.
Yep.
Wow. Damn, man. Every day there's I'm learning about new stocks that are at 52-week highs or all-time highs.
That's something you normally see in bull markets, Spencer. You kind of be like, wow, another stock making all-time highs. Oh, wow. So the list of stocks making new highs historically tends to get longer in bull markets. It's It's when that list gets shorter or non-existent that bear markets arrive. You feel me?
Yep. Yep. I also like to keep tabs on the companies reporting earnings and the ones that are gapping up or gapping down, and do those gaps hold or no? Like, do the gains hold or do the losses hold? Meta's a little bit off its highs so far, but by and large the gains are holding, and I'll watch that throughout the day. That'll be sort of in focus for me, and then you see. What was it? You had brought this up earlier, like Netflix, for example, which gapped down on its report and hasn't and actually has kept going down. So I just like to keep an eye on those, right? How do they do in the days and weeks following an earnings report? So okay, let's do some recess. And then we can hop off here and then go about our day. And you have a big day, and
have a great day.
Get on with that.
Great day.
All right.
So the other day we're talking about omakase, and I couldn't believe it. Spencer Israel did not know what omakase was. I don't know. It's maybe the best word in the world. So I am I'm meeting Tom Lee, as I mentioned, for omakase today in the city down in the village. And I just wanted to just explain the word omakase. It literally means I leave it up to you. That's what omakase means in Japanese. So in other words, you tell the chef, I have arrived. Feed me till I tell you to stop. And it's freaking awesome. So you and I are gonna have to get together and do a nice little omakase. It's I don't have like many goals in life. Like I don't have like that many goals. Like I still need to go to like the Super Bowl to see the Dolphins win the Super Bowl, but I don't really have much control over that. So in terms of goals that I can control, eating at all of the best omakase in New York City is definitely at the top of that list of kind of like, every week when I'm like, okay, what do I need to do today? What do I need to do this week? It's like breathe, exercise, like hang out with my family, find another omakase place in New York City is like on that to-do list. It's very important to me.
It's good to have goals, JC.
Gotta have goals in life.
Gotta have goals. By the way, Nasdaq Poppy says, "Don't let Batnick cut you off today when you go on their show."
Dude, he's gonna cut me off all the time. He loves cutting me off. I'm gonna bring like all these like base metal stocks that he's gonna hate to look at. He's gonna be like, "Well, look at some tech, JC."
Hey, I can't say I blame him. You know what I mean?
He just likes the junky stocks.
Base metals don't really get the juices flowing, right? As much as growth tech.
Is that a gauge of sentiment? Is that information?
It's just a general. Maybe I'm a product of the last decade, right? I don't know what to tell you.
Yes, Rachel, I will be there with Josh and Batnick this afternoon. It'll probably be published tomorrow. So it's a lot of fun. Obviously, I've been friends with those guys for a long time, so a lot of laughs usually.
My recess is shout out to the women's national team. They tied last night, unfortunately, but they're still in the lead in their pool.
What sport?
So, Women's World Cup.
Is that going on?
It is going on over in Australia and New Zealand. They tied 1-1 last night in the Netherlands, but they're still in a good spot. And
since when do you watch women's soccer?
I love big global sporting events. So World Cup, the Olympics. I love that stuff.
All right. I'm into the Olympics too. Are you going to go in 2028? Olympics in LA. You coming?
Well, before that, we have a World Cup in the US.
Yeah, dude, let's go because they got some out by us. So why don't we go? I'm down.
Yeah, it's going to be in our neck of the woods next year, right?
Yeah, my wife has no interest in going. I was like, all right.
Wait, is it next year or is it?
It's in 24. No, it's next year. No, that's right. Isn't it next year?
That's what I said. It's next year.
Oh, 24. That's next year. Yeah.
That would be super. No, it's
next summer.
26.
Oh, really?
So it's that makes more sense because 2 years ago, right? Okay, or last year was the Messi. So anyway, it's 26. It'll be in North America, U.S., Canada, Mexico. There's definitely,
and as much as I want to go to like East Rutherford, New Jersey, which is lovely this time of year, I really kind of want to go to a one in Miami, right? Like if we could go to a big match in Miami, that'd be cool.
Let's see. It's the games are in, at least the games in America. Boston, Miami, New York. So yeah, East Rutherford, Philly, Toronto. Those were the host cities. Oh, there's more. I'm sorry. Atlanta, Dallas,
DC?
Houston, Kansas. Yeah, Atlanta, Dallas, Houston, Kansas City, L.A., San Fran, Seattle. Okay, so a lot.
Seattle.
Seattle.
Oh,
Sorry.
Seattle.
Okay. Wow. Definitely want to get to that. That's a bucket list item. All right. That's a wrap for the show today. Everyone, thank you to our guests, Rob Koyfin, Kimmy Sokoloff. Thanks to you for hanging out in the chat with us. If you're watching on Twitter, we appreciate you. If you're watching on YouTube, thank you very much. If you're in the chat, you are our favorite listener.
And if you never listen to anything else I say forever, just step up your omakase game. That's it. Everybody just more fish, more raw fish.
More raw fish. Hey, stay tuned. CRL Chart Request Live today, 1 p.m. Eastern. Myself and Patrick Donawilla from the Chart Report will be doing that. If you have any requests for that show, email us questions@stockmarketmedia.com. We'll see you guys there. Have a good rest of your day. JC, enjoy your omakase.
Adios.
Run it. I can't take no